it's curious that all these big guns are really taking a position against the U.S. dollar. So you've got Stan Druckenmiller. You've got also anti-dollar is Ray Dalio. He's heavy into gold. He thinks the dollar is going to be a very bad situation going forward. He has not yet jumped into the Bitcoin boat, but I predict he will very soon. You've got Warren Buffett. He doesn't like Bitcoin, but he is putting a lot of money work in Japan to get out of the dollar. And you've got Paul Tudor Jones. He's heavy into gold, heavy into Bitcoin. So all the titanic, movers and shakers of the global financial world are tiptoeing away from the dollar. At one point, the trap door will open and the dollar will be limit down every day for 2-3 weeks, and there'll be no coming back. But if you're not positioned ahead of that, you're in bad trouble.
Stan Druckenmiller is in the hedge fund world. He's worth about $4 billion. Paul Tudor Jones is worth about $5 billion. They're two hedge fund kings. You mentioned Warren Buffett. He's a value investor, so he buys stocks for the long haul that he thinks are undervalued. And another similar value investor is Bill Miller, who became legendary at Legg Mason, a big fund out of Boston. And he became famous when he had those 15 years in a row from 1990 to 2005 of the, no losses. He just kept outperforming the market. Well, he says Wall Street legend Bill Miller reveals strong Bitcoin recommendation despite massive price surge. Wall Street legend Bill Miller, the founder of investment manager Miller Value Partners, has said he strongly recommends Bitcoin at current prices, branding it the single best performing asset class in the last year, 5-year, and 10-year periods. And I think it's, that the meme, this crazy meme that we see all around us, it's no coincidence that we're seeing this right at the election time, that the likes of Bill Miller, of Stan Druckenmiller are coming out now and saying they're going long Bitcoin.
Look, so much of the money around the world, $100 trillion worth that's managed, is done algorithmically or it's done using automatic asset allocation models. And because most people around the world who have their money being managed, they just don't want to lose money. And they want to keep at least abreast or possibly outperform inflation if they can, right? Most people aren't looking to shoot the lights out. They just want a good representation in their investments to make sure that they stay with or slightly ahead of inflation if possible. What happens when, as Bill Miller says, when Bitcoin shows up as the best performing asset for 1 year, 3 year, 5 year, 10 year, okay, that information goes into the database and then it's broadcast out to that $100 trillion pool of capital. And most of that money is algorithmically or automatically programmed where they, by virtue of statutory
fiduciary responsibility.
Well, if it's a fiduciary responsibility, but the program will kick in automatically kick in. They need representation to mimic that representation, that they need the asset, they need to be an asset that's in that performance bucket of that performance level, right? So a lot of people now, for example, MicroStrategy's got $420 billion they invested. Now it's over almost, $500 or $600 billion. A lot of that stock's held in the pension accounts of people all over Europe and all over the world. So people don't even know they own Bitcoin by owning MicroStrategy. And then they'll say, why is MicroStrategy? What's that all about? What, they own Bitcoin? What's that? And then it just permeates, because remember, Bitcoin is two things. It's gold meets a messaging app. Mm-hmm. That's what it is. It grows like a messaging app exponentially, but it's, it has the properties of gold of being, in this case, absolutely scarce, immutable, censorship resistant, and really important, Iran, unconfiscatable. Keep hodling, Iran. Keep hodling.